Ask 10 people to explain the difference between a mobile home and a tiny house, and you'll probably get 10 different answers, and most of them will be wrong. Some people think a tiny house is just a small mobile home. Some think mobile homes stopped being built decades ago. Some think they're regulated the exact same way. Almost none of that is actually true in 2026. These are two completely different legal categories, built under two completely different sets of federal and state rules, financed through two completely different systems, and in more than a few cases, one of them is legally allowed somewhere the other one flatly isn't, on the exact same piece of land. By the end of this video, you're going to know exactly what separates these two housing types: construction standards, real 2026 pricing, financing, resale value, and where each one is actually allowed to legally sit. Because getting this distinction wrong isn't just a trivia mistake. It's the kind of mistake that can cost someone tens of thousands of dollars in the wrong loan, or leave them with a home they legally can't place anywhere. Before we break down the differences one by one, hit subscribe now, because this comparison goes deeper than most guides on this topic, and the financing section alone could save you from a genuinely expensive mistake if you're actually shopping for one of these right now. Subscribe now so you don't miss any of it. Let's start with the one distinction that actually explains everything else: the law. Here's the single most important fact in this entire comparison, and almost nobody explains it clearly. Mobile home and manufactured home are not casual synonyms for the same thing. They're two different legal terms separated by one specific date. In 1976, the federal government established the Manufactured Home Construction and Safety Standards, universally referred to as the HUD Code. Any home built to that federal standard after that date is legally a manufactured home. Anything built before 1976, under the older, looser standard that existed at the time, is technically a mobile home in the strict legal sense, an older term that today mostly refers to a category of housing that, generationally speaking, isn't being newly built anymore. So when people today say mobile home, colloquially, what they're almost always describing is a manufactured home, a factory-built house, constructed entirely off-site under federal HUD oversight, then transported to its final location as a complete or nearly complete structure. This single federal standard, administered by the Department of Housing and Urban Development, covers everything from wind resistance and fire safety to plumbing and electrical systems, uniformly, nationwide. Tiny houses occupy a genuinely different, and honestly much messier, legal space. A tiny house on wheels doesn't fall under the HUD code at all. Instead, it's commonly registered through the DMV, the same government body that titles cars and trailers, rather than through HUD. Depending on the specific state, a tiny house on wheels might be titled as a recreational vehicle, a travel trailer, or in some newer, more tiny house-specific frameworks, its own emerging legal category. A tiny house built on a permanent foundation, by contrast, gets treated much more like a conventional house, falling under the International Residential Code, the same set of building standards used for ordinary site-built homes, just applied to a dramatically smaller structure. This distinction matters enormously in practice, because it means manufactured homes have one single, consistent federal standard everywhere in the country, while tiny houses can be regulated in genuinely different ways depending on whether they're on wheels or a foundation, and depending on which state, county, or even city they happen to be sitting in. One is a clear, uniform federal category. The other is a patchwork that changes as you cross a county line. It's also worth being precise about a related, but distinct category that frequently gets lumped into this same conversation: modular homes. A modular home is also built in factory sections, similar in process to a manufactured home, but it's required to follow the same International Residential Code standards used for ordinary site-built houses, rather than the separate HUD code. Modular homes are inspected and approved the same way a traditional house would be, which places them, legally, much closer to a conventional home than either a manufactured home or a tiny house, even though the construction process, building in sections at a factory, then assembling on site, looks similar to how a manufactured home comes together. Tiny houses can technically be built to meet IRC standards as well, particularly foundation-built versions. But even then, local zoning rules frequently still restrict where they can actually be placed in a way that a fully code-compliant modular or traditional home generally wouldn't face. beyond the legal classification. The most immediately obvious difference between these two housing types is sheer physical size, and the gap here is genuinely enormous. A single-wide manufactured home typically runs between 480 and 1,440 square feet. A double-wide manufactured home, which is simply two single-wide sections joined together on site, typically spans 640 to 2,560 square feet. And triple-wide manufactured homes, while less common, can reach 3,600 square feet or more, genuinely comparable in size to a mid-sized traditional house. Tiny houses operate in a completely different bracket. Most tiny houses fall somewhere between 100 and 400 square feet, with some larger custom or family-oriented builds pushing toward the upper end of that range, but rarely beyond it. Manufactured homes, in other words, aren't just bigger tiny houses. Even a small single-wide manufactured home can be more than 3 times the size of a large tiny house, and a double-wide can be 6 to 10 times larger. This size difference cascades into almost every other part of the comparison. Manufactured homes routinely include multiple separate bedrooms, full-size living rooms, and dedicated dining spaces, genuinely comparable in layout to a conventional single-family home, just built through a different construction process. Tiny houses, by contrast, are far more often built around a single open-concept main level, frequently paired with a sleeping loft accessed by a ladder or a compact staircase, prioritizing efficient use of a small footprint over the room-by-room separation that a manufactured home or traditional house would offer. For a family that genuinely needs multiple private bedrooms, a manufactured home is often simply the more practical option on square footage alone. For someone prioritizing minimalism, mobility, or the lowest possible footprint, a tiny house is built specifically around that priority in a way a manufactured home, even a small single-wide, generally isn't. Let's get into actual numbers, because this is where a lot of assumptions people carry into this comparison turn out to be wrong. According to current 2026 cost data, a new manufactured home averages around $148,000, though the full range spans considerably wider than that single average suggests, anywhere from roughly $50,000 to $250,000 depending on size, number of sections, and finish level. A used manufactured home can come in dramatically lower, sometimes around $25,000, for buyers willing to take on an older unit. Tiny houses, meanwhile, average around $30,000 to $60,000 nationally for a complete build, with a broader realistic range spanning from as low as $10,000 for a genuinely minimal, bare-bones build, up to $200,000 or more for a fully custom, luxury tiny home with premium finishes. A more typical, professionally built tiny home on wheels in 2026 tends to land in the $70,000 to $150,000 range, according to current builder pricing data. So on raw sticker price, tiny houses can be dramatically cheaper than manufactured homes at the low end, but the ranges genuinely overlap in the middle. A modest manufactured home and a well-appointed custom tiny house can land at a remarkably similar price point, even though one of them offers several times more square footage than the other. This is exactly why price per square foot is often the more honest number to compare. Manufactured homes generally deliver more livable space per dollar spent, simply because factory-scale production of a larger structure spreads fixed costs, plumbing systems, electrical panels, HVAC units, across more total square footage. Tiny houses, needing the same core systems packed into a fraction of the space, tend to run a noticeably higher cost per square foot as a direct result. There's also a real cost difference in moving each of these once they're already built and placed. Relocating a manufactured home typically runs $5,000 to $20,000, a genuinely significant undertaking involving specialized transport and often a full disconnection and reconnection of utilities at the new site. A tiny house on wheels, by design, is built specifically to be towed behind a suitable vehicle, making relocation dramatically cheaper and faster in most cases, often limited mainly by the cost of fuel and, if needed, a tow vehicle rental, rather than a specialized moving service. Build timelines and delivery methods also diverge in ways worth understanding before you commit to either path. A manufactured home's factory production run typically moves through design finalization, material procurement, framing, systems installation for electrical, plumbing, and HVAC, interior finishing, and a final quality inspection before being transported to its site as one or more nearly complete sections. A process that, for an established manufacturer, tends to move faster and more predictably than most site-built construction, precisely because the entire process happens in a controlled factory environment rather than being subject to weather delays or the availability of individual trade contractors. Tiny houses offer a wider range of paths to completion, which is part of what makes their pricing so varied. Buyers can choose a fully turnkey unit, built complete by a manufacturer and delivered ready to move into. They can choose a semi-DIY path, hiring out specialized work like electrical and plumbing while handling the rest of the build themselves, which current pricing data puts at roughly $41,000 to $87,000, depending on finish level. Or they can go fully DIY with a kit, running anywhere from $10,000 to $20,000 for a basic design up to $57,000 for a more complete material package. Dramatically cheaper on paper, but requiring the buyer to take on both the physical labor and the liability that a turnkey manufacturer would otherwise assume. It's also worth knowing that turnkey manufacturers typically include a structural warranty, often 1 to 10 years on framing, roofing, and siding, plus 1 to 2 years on core systems. Protection that a fully DIY kit build generally doesn't come with at all. This is the part of the comparison that catches more buyers off guard than almost anything else, so it's worth slowing down here. Manufactured homes, because they fall under the clear, federally recognized HUD code, have access to financing options that tiny houses simply don't. Depending on whether the manufactured home is being purchased along with the land underneath it or treated as personal property on leased or rented land, buyers can potentially access FHA-backed loans, USDA loans in eligible rural areas, VA loans for qualifying veterans, or specialized manufactured home loan products offered by many conventional lenders. Because HUD's consistent national standard gives lenders a reliable, well-understood category to underwrite against, tiny houses face a much rockier financing landscape. Because most tiny houses don't meet the specific requirements of a standard mortgage, often due to their small size falling under minimum square footage requirements, or their classification as a vehicle rather than real property. Most tiny home buyers end up using personal loans, RV loans if the unit carries proper RVI certification, or in some cases dedicated tiny home lenders who've built loan products specifically around this niche. Interest rates on these alternative financing paths typically run higher than a conventional mortgage, and lenders generally expect a stronger credit profile and a meaningful down payment, often in the 10 to 20% range, before approving the loan. It's also worth understanding that within the tiny house financing world itself, the specific type of certification matters enormously. A tiny house built to HUD code standards and permanently affixed to land with a properly recorded deed conversion opens up financing options that look more like a manufactured home loan. A tiny house certified through the RV Industry Association, by contrast, becomes eligible for RV loans specifically, but that same RVIA classification restricts where the home could be legally, permanently parked, since it's now formally categorized as a recreational vehicle rather than a dwelling in many jurisdictions. Buyers who prioritize mobility tend to need that RVIA certification for lender eligibility, even though it comes with real placement restrictions attached. For someone comparing these two options purely on affordability and accessibility of financing, this is often the deciding factor, more than the sticker price itself. A manufactured home, backed by a clear federal construction standard, is simply easier to finance through mainstream channels. A tiny house, existing in a more fragmented regulatory space, usually means a more expensive, more limited financing path, regardless of how affordable the actual structure itself might be. Here's where the two paths diverge again, and it's genuinely one of the most practically important differences between them. Manufactured homes have an established, well-understood placement ecosystem. Manufactured home communities and parks exist specifically to house them, professionally managed, with dedicated infrastructure already built to support HUD code homes specifically. Many of these communities exclusively accept HUD-certified manufactured homes, which creates a real problem for tiny house owners hoping to use the same communities, because most tiny homes simply aren't HUD-certified, and as a result, many manufactured home parks won't accept them at all. That said, the situation is genuinely shifting. as tiny house living has grown in visibility and demand over the past several years. A growing number of manufactured home communities have started opening their doors to tiny houses as well, particularly ones that are either built to HUD standards themselves or properly RV certified. It's not universal yet, but it's a real and ongoing trend worth knowing about if community living with dedicated infrastructure is part of your plan. Outside of dedicated communities, placement rules diverge sharply based on local zoning, and this is genuinely one of the more unpredictable parts of either purchase. States considered broadly friendly toward tiny home construction and placement include California, Colorado, Oregon, and Texas, according to current zoning guides. Though even within these more accommodating states, individual counties and cities frequently maintain their own, often stricter, local rules layered on top of the state's general posture. A property owner can be in a genuinely tiny house-friendly state and still face real placement restrictions once they check their specific city's zoning code. Manufactured homes generally face a more predictable, if sometimes more restrictive, zoning landscape, since decades of established HUD code housing policy have given most jurisdictions a clear, well-worn framework for where these homes are and aren't allowed. Tiny houses, especially those on wheels, more often fall into the same kind of legal gray zone we've covered on this channel before, treated as a vehicle in most places, which limits full-time residential use to RV parks, designated tiny house communities, or jurisdictions that have specifically carved out an exception. Both of these housing types share one important trait that surprises a lot of first-time buyers coming from traditional real estate. Neither one is generally treated as an appreciating asset the way a conventional site-built house is. Manufactured homes, much like tiny houses, tend to depreciate over time when not attached to owned land, following a pattern that has more in common with vehicle depreciation than traditional real estate appreciation, a direct consequence of their classification as personal property in many financing and ownership scenarios, rather than real property tied permanently to land. Tiny houses follow the same broad pattern, and in some ways face an even steeper resale challenge, simply because the buyer pool remains smaller and more niche than the manufactured home market, which has decades of established infrastructure, dedicated real estate categories, and a much larger, more mainstream base of interested buyers behind it. The genuine exception for both categories comes when the structure is permanently affixed to land the owner actually owns, with a properly recorded deed conversion transforming what would otherwise be personal property into real property. In that scenario, both manufactured homes and tiny houses can participate in the appreciation of the underlying land, even if the structure itself would depreciate on its own. The same principle we've discussed before regarding accessory dwelling units specifically. Bringing all of this together, the honest answer to which one is better genuinely depends on what you're optimizing for, because these two paths solve the affordability problem in fundamentally different ways. A manufactured home shrinks the cost per square foot through efficient, standardized factory construction, without shrinking the livable space nearly as dramatically as a tiny house does. It's generally the stronger choice for a family that needs multiple real bedrooms, wants access to more conventional financing options, and values the predictability of a long-established, federally regulated housing category with a mature placement ecosystem already built around it. A tiny house shrinks the cost by shrinking the space itself dramatically, often trading square footage for genuine mobility, a smaller environmental footprint, and in many cases a meaningfully lower total price tag at the entry level. It tends to suit individuals, couples, or minimalists more than larger families, and it generally demands more research and more tolerance for regulatory uncertainty in exchange for that flexibility and lower cost of entry. Neither one is a strictly better financial decision in the abstract. A manufactured home is the more turnkey, more conventionally financeable, more spacious option. A tiny house is the more flexible, more minimalist, and often cheaper option at the cost of a more fragmented legal landscape and a genuinely more limited financing path. The right choice comes down to whether your priority is space and predictability or mobility and minimalism, because both paths get you to a smaller, more affordable home than a traditional site-built house, just by taking two very different roads to get there. There's one more practical consideration worth naming directly, since it rarely shows up in either housing type's marketing. how each one handles growing needs over time. A family that starts with a single wide manufactured home retains a real, well-established path to upgrading. Trading up to a double wide or a larger unit within the same regulatory category is a common, well-understood transaction in a manufactured housing market. Tiny house owners facing a growing household often face a harder choice, since scaling up frequently means either building an entirely separate second structure or selling into that smaller, more niche resale market we discussed earlier. It's not a deal breaker for either option, but it's a genuine factor worth weighing against your own 5 and 10-year plans, not just your needs today. So let's bring this back to where we started. Mobile home and manufactured home aren't the same as tiny house, not by construction standard, not by legal classification, not by size, not by financing, and not by where either one is actually allowed to sit. One is a factory-built house governed by a single, consistent federal code since 1976. The other exists in a much more fragmented legal space, registered more like a vehicle than a home in a large share of cases, with rules that can change completely depending on which side of a county line you're standing on. Getting this distinction right before you buy either one isn't just a matter of terminology. It's the difference between qualifying for a straightforward loan and getting stuck with an expensive personal loan, or between finding a community that welcomes your new home and discovering, only after you've already bought it, that it isn't legally allowed to park there at all. If you want more of these, real comparisons, real 2026 numbers, no exaggeration, subscribe, because the next video takes this same side-by-side approach and compares a tiny house on wheels against a tiny house on a permanent foundation. Two options that sound nearly identical, but are legally treated in almost completely different ways. Thanks for watching all the way through. I'll see you in the next one.